Regardless of what we technically call it, I think most of us can agree that all signs are pointing to an economy that is getting tighter, which means your small business clients will need your assistance in evaluating the spending of every dollar. How would you like to be the hero to your clients by helping them to get free payroll until January 31st, 2023? I repeat, free payroll until January 31st, 2023. Stay tuned to hear more from our sponsor OnPay later in the episode.
You know why these things are good? They're going to end up being a net positive disruptor. I'm not being non-sympathetic. There are tax preparers out there that feel like this is a very big step in their backyard, and I get it. It's the way bookkeepers felt recently with the QuickBooks Live piece, but it's accelerating the path or the journey from where tax preparers and bookkeepers are to where they need to be.
Coming to you weekly from the OnPay recording studio, this is the Cloud Accounting Podcast.
Hello, and welcome to another episode of the Cloud Accounting Podcast. I am Blake Oliver.
And I'm David Leary. And Blake, we have another guest.
Yes, Joe Woodard. Hello, welcome.
It's great to be here, guys.
Great to have you.
Yeah. I've tried to get Joe on the show now, I think 3 years in a row, and it's never happened. We'll be at Scaling New Heights. We'll be doing live recordings, and Joe just gets too busy, and then it doesn't happen.
Or pandemics hit, and we move Scaling New Heights.
And that happened. And then trying to book him is just hard in general for a different episode. So finally, I was like, you know what? We're recording every Friday. We'll just give him the choice of every Friday, and he'll have to come to one of them.
And we found one. This is great. It's so good to be here.
We found one that fits.
Hey guys, happy International Accounting Day. International Accounting Day was November 10th, so yesterday, as we record this. Yeah, on that day, 526 years ago, Luca Pacioli published his critical work, Summa de Arithmetica, Geometria Proportionae et Proportionalita, which became the foundation for further advancement of accounting. It's amazing to think that our profession has been around now for over 500 years. And yet, as we were discussing last week on the episode, the shortage of accountants and the lack of interest in accounting may be threatening the future of capitalism. And I can't believe it, but we actually saw this start to happen this week with the collapse of the crypto exchange FTX, a company that was 1 week ago valued at something like $38 billion is wiped out, bankrupt, and billions and billions and billions of dollars of customer funds are likely not ever going to be returned to anyone. It's kind of amazing that this is happening. David, were you following this?
I've tried to. I mean, explain. I think this is the problem. I was thinking about this morning in the kitchen. Like, I can't. This doesn't pass the mom test. Like, I can't explain to my mom what happened here.
I don't think most people.
And because of that is the reason it happened. If that makes any sense.
Yeah.
Right.
I mean, I'm not sure if most people can explain what happened. I was actually Googling yesterday, trying to prepare for this, to sort of do that, right, David? Explain what happened, like summarize what happened for our accountants and bookkeepers who are listening. And there's not a lot of information out there because FTX, a crypto exchange that was offshore in the Bahamas somewhere, does not get audited. It has no financial statements that it issues. It is not audited by any firm in the world, as far as we can tell. And what happened, apparently, as far as I can tell, is that this exchange, now a crypto exchange is like a bank, right, in a lot of ways. And so they take custody of your funds, you deposit funds with them, and you're supposed to be able to invest it. I sort of think of it like a brokerage account, right? And in the U.S., a brokerage, has to be audited and maintain custody of client money, right? They can't just, do whatever they want with it. But FTX isn't subject to those regulations. And so what they were doing, apparently, is loaning customer funds to a related entity called Alameda Research, which was then investing that in very speculative crypto investments, which included something like they were doing what's called yield farming, which is investing in these new cryptocurrencies that offer a yield, very speculative stuff, very dangerous, very risky. And something like half of the customer funds were being loaned out to this related entity. And so when there was a run on the bank, when people started to worry that FTX wasn't going to be liquid any longer, there was a run on the bank, and they had to freeze withdrawals
again.
Yeah,
which now the fourth or fifth one of these companies have had to do this, right?
Yeah.
Your 10% return becomes absolutely nothing really quick.
I just can't believe that people are investing in these exchanges. They're not audited. They have no financial statements. Like we're just trusting that this is being done properly, and this is the natural
they're
result.
hardly businesses. Like this founder, I don't know if you saw some of this. Apparently, he has a cabal he runs. They all live in the Bahamas. Him and 10 or 12 of the other 15 of the other employees all live there together. They've all exchanged girlfriends. Like the whole thing is just a domino. Like no, there's no due diligence. People are just buying this such on blind faith. And it goes back to Blake. Let's go. This is the week. It's the 1 year anniversary of the big Matt Damon commercial.
Oh, at the Super Bowl commercial where he said,
the courage to buy crypto
for the brave, right?
And you went off on that commercial in February of last year. I went back and listened to some of that episode. You kind of went off on that commercial. And at that point, crypto already fell 30%. And 2 weeks before that, we had our episode where it was titled Crypto is a Scam. And we had listeners calling us and telling us how ignorant we were and that we didn't do enough research. But obviously, people are not doing research who are investing in this, because these are not. This guy had a $16 billion net worth.
I know. Well, but on paper, right?
On paper,
apparently
yes.
FTX only ever raised only $2 billion. So they somehow got to the $38 billion valuation on paper. They were trying to raise money. I don't want to go into super detail on this because we got a lot else to talk about, but there's one thing that relates to accounting that I want to bring up, which is this headline on The Telegraph. FTX founder blames crypto meltdown on, quote, poor labeling, unquote, of bank accounts. So Mr. Bankman Freed, who Sam Bankman Freed is the founder of FTX, who was the darling of the crypto world until just a few days ago. He posted a Twitter thread on Thursday, and he apologized repeatedly to FTX users while blaming the exchange's woes on his own misreading of its management accounts. Here's the quote: "A poor internal labeling of bank-related accounts meant that I was substantially off on my sense of users' margin," unquote. "I effed up. I should have done better." So think about this. He's blaming, I don't know if we can take him at his word, right? But he's blaming that he's looking at his books and he had not properly labeled which accounts were user funds, depositor funds, and his funds. That's bad bookkeeping, right? That's blaming it on bookkeeping. And I'm wondering, does he even have an accountant? Were there any accountants working at FTX? At all, period, Joe, do you invest in crypto?
No, invest wouldn't be the word. So I've got a couple of comments here. One, I'd like to know what the average size of an account holder was or is in any active cryptocurrency, because I suspect that a lot of people are like me. They see a new one hit, I'll go throw $100 at it just so that in my Coinbase, I could use $100 as a baseline as if it's up or down, right? And also look at the graphs and stuff. But I play. And if 100,000 people play with $100, right, or 1 million people play with $100, it can start adding up. So how much of that is actually going on, and what's the actual customer risk, customer impact of something like this happening? So that's number one. Number two, none of this is going to be manageable. I don't think it's a scam, but I also think it's not viable is the way I would phrase it. Maybe you guys were being hyperbolic with the word scam, but it's not viable because it's not anchored in any kind of a tangible standard. We used to have a gold standard in the United States. We know full well from the last year that our dollar is directly related to our economy. At least it's anchored in something, and these things are anchored in nothing. They're anchored in public
Worst of
perception
all, they're
of
anchored
their
on
worth.
each other, right?
Right. Yes,
they're
exactly.
anchored on each other. It's like, ours is anchored on this other fictitious coin.
Yes.
And ours is on this other fictitious coin.
And nothing's anchored in actual tangible reality. But now to get to your your actual question, which since I've waxed, eloquent here, I've forgotten what it was, Blake. So tee up your actual question. I'll answer it.
I just want to know if you invest in cryptocurrency, and you did answer that.
Yeah, no, I do,
but
invest is a very loose word. I think a lot of people are like me; they're dabbling in it. Yeah.
Well, so you brought up a good point, which is that these cryptocurrencies are often, they're not rooted in anything, right? There are different types of cryptocurrencies, and we've got, Bitcoin, we've got Tether, we've got USDC, we've got, and FTX had its own cryptocurrency that it issued. And this is what set the whole thing off, is that the exchange, FTX, issued its own cryptocurrency, which, those are like IOUs essentially, right? And it was discovered or leaked that the related entity, Alameda, which is also owned by the founder of FTX, held enormous amounts of FTX crypto. And so that is what set off the bank run, because people realize, if FTX collapses, if the currency collapses, the crypto collapses, then Alameda is insolvent. And then very likely the exchange is going to be insolvent, right? That's what set off the run. And this is the problem with unregulated exchanges like this.
The lack of regulation is part of the problem.
Yeah.
But if you want to create an anchor point that's legitimate, because that one was all paper thin, but where I think the future of crypto is going to go is anchored in major corporations. If you're talking about a Microsoft cryptocurrency or an Apple cryptocurrency, then they're anchored in the success and in the stability of those corporations. But don't we just call that stock, right? But if we treat this as an extension of the stock model, not stock, but something that operates similarly in its valuation to stock, but in a much more fluid way that doesn't require brokerages, doesn't require trading, that still, as we all know, impacted by the Schedule D, so it fits, then I think what we're going to end up with is sort of the Volkswagen of stock, the people's stock. And it's cryptocurrency anchor-based in one or more corporations, a single or a corporate portfolio, which would be like a fund, right? I think it's going to morph in that direction.
As an ownership model?
No, that's back to stock as an anchor point, so that the Microsoft is stabilizing the currency, just the same way that the economy of the United States stabilizes ours, but at a much greater scale.
So it's like I have my Starbucks card, or my Starbucks app, and I juice it up. It's just no different than when I juiced up my Cash App with some Bitcoin. I juice that up.
You believe in the corporation, there's no risk.
I have virtual Starbucks dollars, but they're somewhat backed because of the value of Starbucks itself. They actually produce
with one big difference: they don't appreciate
Yeah.
as Starbucks grows or expands, or So this would actually increase or decrease in value as a currency would. But yes, a good comparison. You're actually saying I'm transferring U.S. dollars to Starbucks dollars, with the difference that this would be a little bit more fluid, yeah. And it would be open to be used as any cryptocurrency. I could use it at places other than Starbucks. So it's a good comparison, but much more versatile. Now, I could also be wrong, but this is just my big theory, right? And I think it's a further stepping stone, big idea here. The Ridley Scott idea that corporations, not nation states, are the governing forces of the future, so that now I'm a citizen of Apple. I'm a citizen of Microsoft, because now it has its own currency. It has its own economy. It has its own technology, which is, of course, the anchor point of all things in the future, since we're going to live in the metaverse. And now in the metaverse is going to be the big catalyst to making this happen 100, 200 years from now, as I will live in Microsoft land and I will visit the real world.
Oh, God, what a depressing thought.
Why does it sound better to live in Google land?
I mean, both of those are depressing thoughts.
Yes, it can be very depressing, yes.
Yeah, well, but Joe, like this whole metaverse thing is just so ridiculous. Like, I think Facebook has made just a fatal error here, because until the technology improves to the point where we don't get motion sickness and we have legs in the metaverse, and people actually want to wear these headsets.
And you can see the peripherals. Yeah.
Yeah, I mean, it's just it's the motion sickness to me is like the biggest problem. If you actually try to put on a headset and use it, I get motion sickness, right?
I read an article that almost half of our armed forces using it get motion sickness, and these are the sort of the people that have the toughest. They've already been vetted for handling volatile environments, and yet they can't manage it. So it's a real big problem. Screen resolution and peripheral vision are the two drivers of that, because your mind's trying to adjust the pixelization to the real world. and it can't do so.
Mm-hmm.
So that is solvable, but I agree. Until it becomes globally usable without making people sick, we're a long way away from the worlds that I just described, right? If they happen at all, they're happening in hundreds of years from now, what I just described. So I don't want to make people think that, that I'm thinking this is the next decade horizon. But I agree, Facebook has bit too much of the apple too fast. I've got a mantra, and I've actually, unfortunately, lived this by experience, that if you're one step ahead, you're a leader. 2 steps ahead, you're a visionary. 3 steps ahead, you're a martyr. And they may just be a martyr on this one.
Well,
I think I saw just, I don't want to derail on Facebook too much, but the All In podcast guys were talking a little bit about how the amount of money and revenue that Facebook is spending on the metaverse is, you think about major things in human history, right? Or technology things. It's way more as a percentage of time and effort that went to the Apollo missions. It's more than Apple invested to get the iPhone out the door. Like, you're right. They're making a 200-year bet, but the way they're burning the money to do it, they're not going to be around in 20 years. They might not be around in 5 years if they keep up at the pace they're spending.
Can I clarify something? Because I just read a great book on the metaverse, and I'll get you guys a link for your listeners. But the horizon on the trillion-dollar economics, most economists and most futurists think, is in the outside 30 years. Some are saying as close as 15 or 20. It's just the Ridley Scott-esque world that I was describing, where corporations run the world. If that ever happens, that's 200, 300 years from now. So I don't know that they're that far ahead of the market, but what I can tell you is I agree with you, David, in principle. The amount of money they're spending for what could be a 30-year horizon is not survivable. And it's ambitious if it's a 10-year horizon. Yeah.
This episode of the Cloud Accounting Podcast is sponsored by FreshBooks. I was on the FreshBooks website this week and saw this blog post, 5 FreshBooks features accountants love. So I figured, let's share it with the Cloud Accounting Podcast audience. So without further ado, number 1, in-app estimates and proposals. With deep customization, you can create bespoke proposals for clients and even capture their e-signatures. Number 2, pre-populated chart of accounts. Help you cut down on your setup times, and it helps clients feel confident when classifying their expenses. 3, app integrations. Square, Dropbox, HubSpot, G Suite, Gusto, and Zoom. Time tracking. Allows your clients to take charge of their own time tracking and payroll and make invoicing a breeze. Checkout links. You can require and collect payments up front to eliminate the need to chase clients that owe you money. If you want to learn about the benefits of working better together with FreshBooks, head over to cloudaccountingpodcast.promo/FreshBooks. That is cloudaccountingpodcast.promo/FreshBooks.
Well, so, Joe, I got to be honest. When I hear people talk about the metaverse in accounting, I just think this is absurd, because there's so much more that we haven't done yet. And to talk about the metaverse is to go way into the future, beyond where we are. Here's an example. CPA Trendlines did a survey asking about workflow solutions. What workflow solutions are you using in your firm? And some of these answers are kind of crazy. Among all firms, it's like a third do not use any workflow tool and are not considering one. And then 16% don't use one but are considering one. And if you add those together, that's basically half of firms do not have a software tool for managing workflow. And what I mean by workflow is tasks, projects, tax returns.
Basically their livelihood. Yeah.
Yeah. So
they probably have it on Excel, though. I imagine they have a spreadsheet set up and they have different tabs for each client. I imagine they're tracking it some way. This, it's not fair.
I imagine that they are not. I imagine that all of that process lives in the brains of the people doing the work, and it's all done with extreme amounts of variables person to person. So there's no consistent brand offering by the firm at all. High errors and omissions, human resource turnover costs are through the roof, even practice threatening. Yes, David, I think some of this percentage has it on Google. I didn't mean to dismiss what you were saying. They have it on Google Sheets or they have it on Excel. But unfortunately, what I've seen as I've coached
even worse.
Thousands of these firms and trained thousands of them, they truly have nothing except what might live on the desk of one person versus another person versus another person, and it's all over the map if it's not just written out on a piece of paper or just in their brain. It's bad out there.
So let's look at what people are using. So the half of firms that are using solutions, it goes Practice CS Projects, which is Thomson Reuters, then Docket Workflow. Oh, and I should say that the Thomson Reuters one is 9%. And then we've got Docket Workflow at like 6%, XCM Workflow at closer to 5%. 5% said unsure. I mean, how could you be unsure what your workflow solution is? 4% Office Tools, 4% Other, CCH Access Workstream, 3%, Custom, that's 3%. I'm guessing that's going to be a lot of bigger firms. Or maybe that's the spreadsheets, David, that you're talking about.
I need to note, too, that CCH Access Workflow, I don't know of a CCH Access Workstream. That may be a typo, but those two are now the same as that's XCM. So that is
maybe that's why you got this unsure. People are like, I don't know what we use. We just have one.
Yeah, which, by the way, is nothing. That's another no answer, right?
Go File Room Firm Flow. That's Thomson Reuters. Never heard of that. That's 2%.
And SharePoint's not a workflow, so I don't even know what they mean by that.
Oh, yeah. Somebody, about 1% around SharePoint if we round. Jetpack Workflow is about 1%. Onvio, another Thomson Reuters project, 1%. Arrow, 1%. iChannel, never heard of that. That's like 0.5%. But none of the other apps, like Carbon is at the bottom with 0, like, percent. None of these apps that we hear about in the cloud accounting world are anywhere in this survey, other than Jetpack, really, in Arrow. And it makes me wonder,
where's Canopy, for example, right?
Right. No Canopy, like no Client Hub, no
Liscio, like this whole,
Liscio.
There's a whole stack of them.
Yeah. So it's like, is this an indication of the CPA Trendlines audience, or is this just that it's still very, very new and people are not using practice management software?
Obviously, any audience is going to create a skew on the demographic, but what I can tell you is, in my experience, this is right on target. Now, maybe not in one app versus another, but this is right on target. Under adoption, disparate adoption of wrong technologies, trying to repurpose things that shouldn't be used as workflow. I see that all over the place. It's bad.
So what do you think, Joe, just rough estimates in your audience? So obviously you kind of have an audience of, it's really not CPA firms per se, but it's a lot of accountants and bookkeepers. They're quick.
Yeah, we're 20% CPA
but
firms.
They're forward thinking a little bit. I think they're earlier adopters per se. The fact that they go to your conference just shows they're interested in growing their firm, et cetera. What was your guess for your audience? Those kind of numbers.
Yeah, we've actually polled our audience on this, and unfortunately, they're quick adopters of technology, but they are slow adopters of workflow. So this is systemic. It extends into the bookkeepers, and there are a couple of reasons why. A much larger percentage of bookkeepers are sole practitioners than CPA firms are. So not that you don't have sole practitioner CPA firms, but a much larger percentage of bookkeepers, it's close to 70% of professional bookkeepers are sole prop or have only contractors supporting them or outsourced workers. So they feel less pressure to standardize because of the fact that they have it all in their brain. And we coach them past that. You need to be scalable even if you don't plan to scale and you want to have something somebody will buy one day. And we have all of these arguments, but it's a much harder value prop to sell. The other reason is because they struggle with the same capacity problems to lead and develop their firms that CPA firms do and multi-practitioner firms do. So, which is really at the heart of this whole thing. If you ask any accountant, do you need standardization of process? Do you want it democratized throughout your practice? Do you want it to be constantly perfected? And do you want to capitalize the knowledge of what's in the brains of your people into true intellectual properties that scale? Of course, they're going to say yes. But then if you ask them, do you have the capacity to, or the resources to build that, or when will you? They can't answer that question.
David, I'm going to let you decide where to go from here. I've got a story. I got more I could talk about. I could talk about TurboTax Live or TurboTax Live Full Service Business. That's a big story.
Yeah, I think that's a great topic. I just saw a press release today about the Connect Experts platform. So we can talk about all that.
Okay, so Caleb Jenkins, thank you to Caleb Jenkins for making me aware of this earlier this week, that TurboTax Live is now doing business returns, and the pricing was briefly available earlier this week. It is now gone. If you go to this TurboTaxLiveBusiness.com website, it just says get 50% off and early access to a dedicated business tax expert. Previously, it said $1,599 with a 50% discount if paid by December something. And the pricing was kind of moving around throughout the week, but it has now gone. And so this is we talked about this was coming, right, David, in a previous episode.
Yeah, I think we went through that huge slide deck, their Investor Day slide deck, and I think in that time it was about a $750 price point, so which would be the $1,599 divided by 2, somewhere around in that area.
And so like it's really happening. TurboTax Live. So you sign up for the TurboTax software and you can chat with an enrolled agent or a CPA inside of the software. You can provide them all your docs, and it is full service. They will actually fill out the forms for you and then go over it with you and then file the return and sign it. This is out. It's happening this year. And the response on tax Twitter was interesting to watch because I guess there's a lot of people, and Joe, I really want to get your take on this. There's a lot of practitioners out there charging less than $1,500 for a tax return, or even less than the 50% off, the $700 or $800.
That's correct.
Yeah, for a business return. So, what's your take on this? How? I mean, it was one thing when we had TurboTax for 1040s because most practitioners, or many practitioners I talked to, are saying, I don't really want to do 1040s anymore. I just do them for the business owners when I do the business return. Like, I'm not really interested in that type of work. But now this is coming after the bread and butter of the accountant community.
Well, but not by design. So I want to make sure I'm clear, and this is my interpretation. I've not talked with any executives at Intuit about this, so I can just read tea leaves. I don't have to worry about speaking out of school. That's the good news. My interpretation of this is this is a battle with H&R Block. This is not a battle with the hang a shingle tax preparer. So now, in the battle between Intuit and H&R Block and all of the shells that are hitting the ground from this battle, is there collateral damage that could impact the rank and file tax preparer? Yes, of course. I mean, that same thing could be said of QuickBooks Live. QuickBooks Live was not designed to compete against the bookkeeper. It was designed to compete against Bench, Belay, Finance Pals, KPMG Spark, as it's called in the UK, or Finance Plus, as it's called in Canada. It was designed to compete against those. That's the war. And now H&R Block's doing bookkeeping. I think Intuit knew that, right? And positioning to that. So, but as the gods of Olympus are throwing lightning bolts at each other, the mortals are impacted, right? That's the way I look at it. But it's an important distinction. A lot of people are out on social media saying that Intuit wants to put professionals out of business. They don't. They have a competitive landscape, and they're fighting their competitive landscape. Again, the gods are throwing lightning bolts. Now,
well, let me stop you there for a second.
The question then is, what is their response? I mean, they still have to think about the small firms out there, and there is a response for that.
How does this not compete with?
I didn't say it didn't compete. I'm saying it's not engineered to put them out of business.
But it might. It could.
Right. So here's Intuit's strategy. Now, and we can debate the merits of the strategy, but their strategy is, while I am fighting with H&R Block and Bench, Belay, and Finance Pals and all these other folks in the bookkeeping space, I want to take care of accountants by providing resources for them to embrace advisory. So Intuit has simultaneously launched a tax advisory initiative coupled with a program, a solution that works with Intuit ProConnect, so that their users of Intuit professional software can offer something that they're not offering through this. They're doing the same thing in the bookkeeping realm. They're leaning very heavily into anything that's advisory related and business coaching related, so that the pro advisors can elevate beyond what QuickBooks Live offers. So I'm telling you what their response is. I'm not debating its merits one way or the other. I'm just throwing it on the table for you guys to tell me what you think.
I think the good news here is I'm on the TurboTax website, And I can't find this. And in the TurboTax website, it's actually, you can tell they're becoming an accounting firm because their menu is so deep of all the different things they offer. You know, like these accounting firm websites that are just very generic and they just have these menus with 30 items in it, 40 items. I can't find the TurboTax Live business returns anywhere a link to it on the bottom of their website or on the website itself. So that should be some comfort, right?
Well,
how are people even going to find this if they hear about it?
That's because this is the first year. I mean, my guess is they don't want to overload it. They're gonna try it out this year, see how it goes, and then grow it. And
also, Intuit tends to stick that. I mean to cut you off, but also Intuit tends to place things out there as pricing tests and market viability tests, and then withdraw them. And they're very experiential. I don't think we're not seeing a change of direction by the launch pullback. We're seeing experiments launched, measured, and pulled. Now the next experiment will come.
This episode of the Cloud Accounting Podcast is sponsored by OnPay. OnPay is built for accountants, and with 30 plus years of payroll experience, they can be the payroll partner you can always rely on to get payroll and tax filings right for any client, even those with distinct needs like restaurants, farms, and churches. When you use OnPay to manage your client's payroll, you can balance that fine line between control and delegation for each client. Regardless, if you keep 100% control, delegate payroll to somebody at your firm, or hand off payroll duties to your client, OnPay always takes care of all tax payments and filings, even the local filings. And with integrations with QuickBooks Online, Xero, and QuickBooks Desktop, you can use OnPay across your entire client base regardless of the accounting GL they are using. OnPay's partner program offers free payroll for your firm, discounts for our rev share, and a dedicated support team of in-house payroll experts who will do all the heavy lifting, from setting up your dashboard to adding your clients and their employees. They'll even enter any prior wages to make it easy to switch. So learn more about switching your clients to the award-winning OnPay payroll and HR, and to get free payroll through January 31st of 2023 for every client you switch to OnPay, head over to cloudaccountingpodcast.promo/OnPay. That is cloudaccountingpodcast.promo/ONPAY. Be more confident about payroll with OnPay.
Well, so what we're going to do is, David, I've already said we're going to do this, so I hope you are in agreement. I tweeted this out. We are going to take one of our entities. We've got 3 entities now, and we are going to run one of them through TurboTax Live Full Service Business and report back to everyone on our experience. Is it accurate? Is it convenient? Is it easier, David, than your experience working with a cloud firm? Because
2 different cloud firms.
2 different cloud firms. We're going to compare. So we'll report back to you all hopefully in January and let you know how it goes.
Yeah, I'll try it. I'll try to do with mine, the Sunburr apps, because it's a little bit the simplest one now at this point, and we'll see what happens. I mean, the premise I've always said is me typing these things into other tools like Tax Caddy and whatever other tools I need to upload or type things into. It's just easier to type it into TurboTax, and so Blake, we've talked about this before, right? It's actually more work to work with a firm than it is to do things yourself.
Well, you end up having to do the same amount of work to type it because you're typing into their tax organizer, online tax organizer, that you would have typed into a TurboTax. And I'm
doing more because the other stuff's already in TurboTax. It just sucks it.
Exactly.
Right? Yeah.
well, and that software is generally better than
yes.
it's better than.
But I don't have 15 years of data in that other software either.
Or there's the half of firms that don't use any sort of workflow management software, so you're just literally manually giving them all the information. There's no system for organizing it.
Do you know why these things are good? They're going to end up being a net positive disruptor. I'm not being non-sympathetic. There are tax preparers out there that feel like this is a very big step in their backyard, and I get it. It's the way bookkeepers felt recently with the QuickBooks Live piece, but it's accelerating the path or the journey from where tax preparers and bookkeepers are to where they need to be, because we're going to discover very quickly where the limits of this are. We've discovered that with QuickBooks Live. QuickBooks Live will not service you if you have inventory. They won't service you if you're of a certain size. There are limits to the kind of clients that QuickBooks Live will take, and you're seeing pro advisors start to gravitate into those safe harbors. But those safe harbors also elevate the pro advisor into larger businesses with more complex operations than they had before.
Right.
this is important for your audience to hear because a lot of them provide client accounting services. QuickBooks Live will not do cash flow projections, spend management, budget creation and curation, collections and bad debt expense mitigation, financial measurements that create actionable management advice. And everything I just mentioned isn't rocket science. A lot of it bookkeepers already know how to do. So now what's going to happen with tax is tax preparers are going to figure out exactly where the limits are here. I called my tax preparer yesterday without an appointment, got him on the phone within 30 seconds to ask him a question about my health insurance plans I'm launching for my company when I'm an S Corp and I own more than 2%. It was a complex question for me. I didn't know how to map it. He answered it in under 15 minutes. And am I going to get that here? I can't imagine that I would. Here I'm going to get a transaction transacted on my behalf called a tax return. So it all comes down to, do you have the right kind of client where this is not a threat for you?
And the other point of view I think I have on it, right, is you have if all these firms are being coached, like fire your D clients, fire your C clients. You just want A and B clients. So you can offer that type of service you got, Joe, right? So if that's the case, where do the C and D people, millions and millions of businesses, go to get services? Somebody's going to have to come in and fill that gap.
They're going to go to TurboTax Live is what they're going to end up going to.
Really, you're going to have to go somewhere because that fits their budget and their demands, right, or their expectations.
I feel that the advice to fire your C and D clients might not be the best advice. And the reason is I think that the reason that those are C and D clients is not necessarily because of the client. It's because of the way the firm operates.
Probably.
Right? So a C and D client might have relatively low fees, but that generally means they're going to be simpler. And if they're not, that means you've mispriced. So that's your fault. If they are not getting you the documents that you need on time and they're difficult to work with, that's often because of you, the firm. Like, put yourself in their shoes. Make it easy for them to get you the documents. Don't rely on them to be proactive. It's all.
How many firms have an upgrade funnel that's defined, right?
Yeah.
And your D&C clients are perfectly fine to keep around as long as they're understood to be in an upgrade funnel.
Mm-hmm.
And as long as you're working the funnel to make sure you're moving a transaction into a relationship, right?
Yep.
Yep.
Well, and the thing is, it's very possible to build a really profitable and successful transactional-based accounting or bookkeeping practice or tax practice. And the move to advisory is basically, it's a way to avoid having to build the systems and processes that allow you to deliver a really good customer experience in a transactional business at scale.
At scale, right.
Most accounting practices, most bookkeeping practices are not built with good processes in place. It's all reliant, like we saw that
in the workflow conversation.
Yeah. Half of firms, no workflow. It's all in your head. And if it's all in your head, you can't serve those lower tiered clients effectively. And that's why you have to get rid of them. But if you could do it, like the way Intuit's doing, what they're building is a whole workflow software that's going to allow them to offer the software and the service together at a really good price that's going to deliver insane margins for them.
But Blake, this is what I would argue, because I agree with everything you're saying.
Yeah.
And I would have agreed with it without any caveats or notes 15, 20 years ago. But the problem is not can or even, theoretically should an accounting firm offer that at scale. Of course, that would have been good business building. But now the competitive landscape, technologically as well as through scaled organizations, is so threatening that unfortunately that whole market is going to be serviced in a very different way, already is being serviced in a very different way. So in terms of the model, yes, but then the question would be, can I ever achieve the degrees of scale that H&R Block and Intuit can achieve? And if the answer is no, then I am a general store with a Walmart next door. I will die. I don't care how good I run my store, how well I run my store.
Well, there is a way to do it in sort of a boutique way. So I spoke with a listener of our show for my Earmark podcast the other week, and he has 85 clients that pay him a starting price of $200 a month for bookkeeping, which is I think a lot of listeners would say, wow, I don't know how he does that. That seems low. The way he does it is it's 85 Keller Williams real estate agents, all exactly the same client. And that's the kind of business that most firms would turn down, but he's managed to make very profitable and into a good business because he's the only one who does it. He markets exclusively to them.
It's a niche.
It's a niche. And
it's a niche.
It competes with QuickBooks Live because they're not going to be able to handle all the unique aspects of being a real estate agent and the documents you get.
So niche is an insulator.
Yeah.
You're absolutely right.
So I think it's possible. And that's the kind of firm I would build, honestly. If I was building a new firm from scratch, I would build one where I'm at that, $500 a month average type of revenue per client. Maybe it's a mix of bookkeeping and tax, not a lot of advisory. I wouldn't build a firm that's based on advisory because with the talent shortage, it's so hard to find people who can deliver it. So I don't want to deliver it, right? I'm not going to
create an in-between for you, though? There's an in-between. Because I agree with you, you can't scale what I would call business coaching, because I want to make sure advisory is such a loaded word. You can't scale business coaching because it's a very specialized set of skills and a smaller, approachable market. You can scale record keeping, but you have to scale it in, like you said, a boutique way, and it's still a red ocean. You still have to navigate around the sharks, and you're still at risk of disruption. But in the middle sits what we have phrased bookkeeping plus. And it gets me back to that list that I was talking about: budget curation, G&A review, spend policies, bad debt expense mitigation, and some light cash flow projections. These are things we've shown. This is not theoretical. We have hundreds of bookkeepers who've now gone through these one-day courses in each of these disciplines and started offering these not as advisory, I'm using air quotes for those of you not watching the video, but as bookkeeping plus. And what we've found is they can transfer that knowledge to the professionals in their firm and scale it. And what we've also found is as soon as you add even a single one of those disciplines to a client of any size at all, say $2 million or above in sales, then you cross the $1,000 month mark in bookkeeping work. And we shoot for a median in this model of $2,500 a month. That's where we want to be.
Yeah, that was my sweet spot for the plus type services, right? But so what would you include in plus, bookkeeping plus?
So spend management, which is a big category. That's your budgets, spend policies, spend cards for preemptive enforcement, G&A analysis. All right, so budget curation. So the budget's a living, breathing thing that includes an element of forecasting and truing up every month. That's spend management. That's a big one. You can break it apart into several different pieces or throw it together as a single thing. Bad debt expense mitigation, and you can do predictive analytics on any QBO or Xero AR ledger by attaching a product called Tally Street. So it makes you look really smart. And you can curate that. You can decrease the length of the AR turns, and you can create immediate cash flow bubbles. Those always feel good. And you can reduce bad debt expense. And then cash flow projections. And I would say very high level financial measurements that don't scare people who aren't CFO types, using products like Reach that have really easy to digest dashboards, and maybe surface once a month or twice a month 4 or 5 things the business owner should look at. That's it. And maybe monitor about 10 things on their behalf. Now you do that and do it with real-time accounting information at some level, at least cash AR AP, and you're going to be offering what almost every other bookkeeper can't offer at scale. And more importantly, to channel my Ron Baker, you're going to be increasing their wealth, giving you the ability to share in that generation of wealth. That's true value pricing.
This episode of the Cloud Accounting Podcast is sponsored by Liscio. Blake and I talk a lot on the show about client experience. A great client experience may be the biggest impact on a firm's success. Did you know that Liscio is so focused on improving the client experience that they have even gone as far as trademarking, and I quote, Client Experience 2.0. Liscio's all-in-one client experience starts with your own firm's experience. By allowing your team to do more together, having everything in one place like secure messaging, client-facing tasks, file exchange and storage, electronic signatures, client invoicing, and client emails. When you improve your team's experience, your client's experience will follow. With Liscio, clients can use the app on their phone to easily e-sign anything, scan and send you documents from anywhere, send messages, and best of all, pay you. If you want to save 40% of your time by having everything in one place and start delivering a client experience 2.0, head over to cloudaccountingpodcast.promo/Liscio. That is cloudaccountingpodcast.promo/LISCIO. So just to rewind, because I think we do need to move on and talk about the Xero news and some other stuff that happened this week. But I just want to make sure I heard you correctly. You're coaching for people, your members, to get their firm to where you're charging clients $1,000 to $2,500 a month.
$1,000 is the concrete floor as the target. Yes.
See, this is why QuickBooks Live. None of these are competition. Then
exactly.
I mean, if you are. You're basically slamming. If you price your services like that, you are slamming the door in the face of somebody who's going to become a QuickBooks Live customer or TurboTax Live customer. So I don't know where the argument is here, because really you're saying I don't want those D and F
exactly
C&D
right.
clients, because I mean, like, I'm not paying that much with my entities to an accounting firm for bookkeeping. Those are high prices.
I wish we wouldn't use the letter ranking of these clients. I think it's insulting to them, right? If we want to focus on client experience and being good advisors to our clients, can you imagine if they heard us talking and they heard us calling them C and D and F clients, how they would feel?
Yeah.
You know, they're not C, D, and F clients. They're clients with specific needs.
Everybody
budgets.
has a journey to protect, Blake. I agree.
Yeah.
But I'm not the protector of everybody's journey.
But at the same time, there's only so many of these $2,500 a month engagements out there.
You don't need a lot of them.
You don't. But I don't know. It's just, I think that, I feel like with a lot of firms, it's sort of like the shiny object syndrome, where you've got this base of clients that you could just be serving better, and you don't need to go out and find all these new advisory type of engagements. You could just do what you're doing better and make more money. Like, most accounting firms are just very poorly managed, to be honest.
I agree there.
They're not run like businesses. You know, they're run like...
You can increase margin by increasing efficiencies, but at some point, your ability to decrease costs is not proportional to the ever-declining price points being driven by, scaled competitors, and you get yourself into a pricing vice. You still have to get out of that vice.
Yeah. Well, having a methodology for, say, increasing prices would help. Most firms don't
yes, it would.
have that.
Yes, that is true.
Right? They never increase the price on anyone. So
they don't. No, that is true.
Yeah.
Yes.
Hey,
Xero had news.
Can I do one more before we get into that, David?
Yeah.
Just because I have to get to this. So speaking of F clients, imagine if Kanye West was your client. Kanye's former accountant has sued him for $4.5 million in unpaid fees. And I just say yay, because he's no longer Kanye. He's just yay. Yes. So this is Celebrity Accountant. I didn't know we had celebrity accountants, but according to Billboard.com, Thomas St. John is a celebrity accountant, and he filed a lawsuit in October that claims he was hired in May by Yeezy LLC to serve as its chief financial officer for an 18-month contract with a, get this, $300,000 per month fee. So talk about advisory pricing on value, right? He says he demanded guarantees because of the risks of working with West, and to assure that the star would not simply walk away, which of course is what he did, exactly that. At a June meeting at the pricey Malibu restaurant Nobu Ryokan, the accountant claims West became heated and aggressive and then abruptly terminated his new CFO. And so now, due to that contract, he is suing for $4.5 million. So I know maybe you're right, Joe.
Should have billed him up front. Monthly fee subscription.
Should be charging every month for that. ACH, buddy.
Yeah, right. Yeah. Get the money up front. All right, David, I'm going to let you take it.
Yeah. So Xero was in the news as well. So they announced their mid-year. What do they call this? They call them
their
quarterly return.
They do half-year results.
Half-year results.
Yeah.
Half-year results. And as part of that, we can get into the details a little bit on that. But as part of that, they've announced that they have a new CEO.
Yeah, Steve Vamos is stepping down after, 5 years?
Yep.
Yeah.
And the new person, they've announced the appointment of, I'm going to mess up the name, Sukhinder.
You got it.
Singh Cassidy.
I think you got it right. Yeah.
All right, good. And that'll be Xero's new CEO as of February 1st, 2023. So she previously was the president of the Asia Pacific and Latin America at Google. She was the president at StubHub, founder of The Board List, founder of Joyus, Joyus. She was CEO there, and she was a co-founder of Yodely. So she's been in this space directly. She's been in related businesses. And apparently
that's the thing is like co-founder of Yodely. Maybe she can finally solve Xero's bank feed problem.
Fix bank feeds.
Yeah. Yeah. Of course, the stock price tanked on this news. I don't know if you saw that, but there was another story about how Xero stock is at its lowest point in a really long time. Yeah, lowest level since March 2020, after they announced the retirement of Steve Amos. But they had good results. David, did you say that, what the numbers were?
Yeah, so I had the deck here. So it looks like the results were good. They had...
it's like 30% growth in revenue, right?
Yeah, 30% growth. Subscribers is up to 3.5 million. They're still sitting on $1.1 billion in cash. Yeah. So they could do acquisitions, they can expand, et cetera. But what I found interesting was in their investor deck. Remember how we were talking about Intuit thinks that they have done nothing yet? They look at the TAM across the board.
Right.
And they're a little sliver of their growth opportunities. And this also explains why it seems like Xero is doubling down on North America. So they have a slide, it's slide 14 in their deck that they released. So they talk about the countries where they've already leveraged the cloud versus adopting the cloud. So leveraging the cloud is going to be their existing market, Australia and New Zealand. So the total TAM they're saying there is 3.7 million, and they're already over 2 million users in there. So, it gets harder to grow every single time. But then they flip over. So the UK, North America, and rest of the world is a total TAM. But North America is a total TAM of 34.5 million. And they only have 354,000 subscribers.
Yeah, it's a huge opportunity, but they can't penetrate. They've completely failed to penetrate the U.S. market to any meaningful degree in the last 10 years. And I've watched them do it.
But that's the only one they can chase, though, in a way, because based on the size. They have to chase it. They have no choice.
Yeah, well, but globally, they've been doing great, right? So like all the growth that they've had has been globally, right? UK.
Rest of the world.
Rest of the world, UK, yeah. But, yeah, they have to... I don't know if they have to get the U.S. market, but I feel like that's the problem is they've actually been so successful globally because they don't really have meaningful competition globally.
But even what they call the rest of the world, the TAM for that is only 1.3 million.
For the whole rest of the world?
Yeah. So UK is 5.5 million, U.S. is 34.5, and the rest of the world, they're saying the TAM is only 1.3 million.
Maybe they mean English speaking. But I feel like if they just went like globally, there's got to be way more small businesses that they can go after. I mean, right? Like, it can't just be a million. Like, what about all of Asia?
Counting this as South Africa, Singapore, some of these other places they're in.
The localization cost to go outside of English speaking is brutal, right?
Yeah.
That's why it took Intuit so long, and they've only put their toe in the water. I think the only viable option for Xero is stay in English speaking countries. I think the U.S. is the only growth area for them. I think they've got to fight for this market again. They've stayed on the beachhead for the last few years, kind of just hovering. They've got to go after it.
Yeah. How do you think, Joe, if you were advising Xero, what would you tell them to do to make inroads against QuickBooks? Because
I would tell them to focus on the fact that they don't have. I know we've already talked about how it's largely optics and you can stay out of their lane and things like this, but how they don't provide bookkeeping services. That's an optics or PR vulnerability they need to exploit if they were competing against Intuit. That's a political game, but it's one they should play. But in the positive sense, they should focus on their entry level price points. The general ledger only, and then there's an incremental step, then the full blown platform. The price point of QBO for multi-portfolio companies is prohibitive, and that's the reason most of them stay on desktop. And then the third thing I would say that they're already doing, lean into product development on warehouse management. Their purchase of Locate was brilliant. If they can execute correctly and go to market with that intellectual property in their product and create a true competitor to QBD Pro, Premier, and Enterprise for warehouse, anybody distribution, anybody wholesale, anybody e-commerce, they're going to put a real dent in the market. There are still millions of QBD users. The reason they don't move is because they think they can't. And the reason they think they can't is because of inventory and job costing. For whatever reason, they're not embracing the add-ons. If Xero will offer these features natively inside of its GL, they can disrupt.
I hope they can do it. I'm a little, I don't know. I'm hesitant to say that they will because they acquired HubDoc, which is a totally natural thing to build inside of Xero, the whole receipt document processing, and it's still separate from Xero. It's still not integrated into
They don't
Xero.
want to lose the QBO attaches and the QB. Yeah. So
Yeah.
As soon as they move it in product, fully in product, see, they lose all that, the QB attaches.
I guess. Yeah.
But with this one, they decided to kill the actual engaged market. They gave locate users a year to get off the platform, and that was a hard cliff. They did not extend. That year expired exactly 31 days ago, and now the only way you can get to the locate inventory goodness is going to be inside of Xero. That's the way to do it right if you're trying to disrupt.
I feel like the other challenge they have is that, like, where QuickBooks has an advantage is you can sign up and you can start invoicing and getting paid very easily. It's all integrated with QuickBooks payments, and like that's what a lot of people do, right? That's how a lot of people sign up. But with Xero, yeah, you can sign up, you can send an invoice, but then to actually get paid, you got to use an add-on, you got to sign up for another service. It's not all seamless. And I feel like that's where they need to focus, just from a customer, direct customer standpoint. But I totally agree with you, Joe, that with the accountants, most accountants I talk to have no idea that these lower tiered GL offerings exist just for accountants. The cash book accounts.
They've under-messaged that.
Yeah. The GL, the ones where it's like just pure write-up with no bank feeds for $3 a month.
$3 a month.
It's insane. It's
all a disregarded holding company needs.
Yeah.
But yeah.
Yeah, and I know there are accountants who do this. Well, they've got, I've got a client with 10 subsidiaries. I'm going to set them up with I end up paying $30 a month with Xero, whereas with QuickBooks I'd be paying $30 per entity or maybe $70 per entity, and people do.
It depends on which version I need, right? Or on.
So like that to me is focusing on the accountant.
And your
needs.
Listeners need to hear this. This is huge.
Yeah.
If the client's on QBO for their operating entities and you're thinking it's just too hard to move them over, first, of course it's not, but there are reporting aggregators that will grab both Xero and QBO data and put it to single dashboards. You don't have to have everything in a single GL for the same client portfolio. You don't.
Right. Yeah.
Yeah, that's a good suggestion because, you see with family offices, they have like the real business. They might have to track in QuickBooks, but the rest of the family office stuff, these other oddball entities, it's the rental house, it's the airplane, it's the boat. You could run those on a $3 a month project.
And right now the accountants are holding on to QBD instances to manage those books. I tell you, that's how they're doing it. And if for $3 a month, just get it to the cloud.
That's a good point.
We got 5 minutes left. One more story, David? You got anything?
Well, I know last week we just mentioned that the IRS is not going to have a commissioner. Well, this morning they did nominate somebody, and we don't even have to go into it too much because I'm working. We might try to get an interview with this person on the Cloud Accounting Podcast, so we don't even have to talk about this person just yet.
Is this Daniel Werfel?
Yes. Not Danny Werfel, the former Florida State quarterback or Florida quarterback from the SEC. It's a different Danny Werfel.
Okay. So he was a previous acting commissioner.
Acting commissioner, I think, under Obama for about 8 months, if I remember correctly, reading the story.
Hey, if you can get him on the show, I think we need to do that. And then we need to invite a bunch of tax preparers and just let them go at him with all their complaints about the IRS. We'll call it the gripe session episode, right? I feel like the IRS doesn't hear from tax preparers directly enough. Like they're getting this all secondhand from associations. When I talk to tax preparers and I hear their stories, it's horrific how bad the service levels are at the IRS for preparers and the stuff that happens, and just, people hanging up on you if they don't know the answer, and people lying to you. And, the IRS needs to, I'm all about the customer, the focus on the customer. I feel like the apps that succeed focus on the customer. The firms that succeed focus on the customer. And if the IRS wants to succeed, they need to focus on the customer. And one of their biggest customers is accountants.
And then I guess the next thing is what's next for Joe. We're going to be at QuickBooks Connect. Joe, are you going to be at QuickBooks Connect?
I will be at QuickBooks Connect. Yes, I and about 6 or 7 members of my team.
Awesome.
You'll have to come to the Cloud Accounting Podcast party we're having.
I would love to do that.
When is that, David?
December 7th, 7 p.m. at the Chandelier Lounge inside the Cosmo Las Vegas Casino.
So 7/7, December 7th.
7/7
at 7 p.m.
Remember, and we'll have a link in the show notes here for by the time people who listen to this episode, that should be ready to go. But then that ends conference season. So Joe, yours is next June. You have your own conference.
Yes, right? It'll be in St. Louis this year, and we are already have record numbers. We're 95% sold out on our show floor, and we are right now, we are 70% as high on attendance as we were in June last year. So we're doing very well, especially in the current economic environment. And
last year you went platform agnostic a little bit now. You used to be very heavy QuickBooks and heavy Intuit, and now everybody is there but Intuit. Is there news here? Are you going to now have QuickBooks there and truly have all the players at one table?
Intuit is always welcome. And my invitation is constantly extended to them. They are welcome to join us at any time. Even if they join me after my show floor is full, I will carve out a space. I will find a way. So hear me Intuit. You're always welcome. But everybody else, with the exception, everybody else is represented at this point either through directly or through a reseller, except at this point, FreshBooks. They are still trying to decide what they want to do with the U.S. market, how they want to engage. But if we can get them, we have every major player: Zoho, Accounting Suite, Sage, Xero, through resellers, Acumatica, NetSuite, and Microsoft Business Central are all represented at the show.
That's great. It's a one-stop shop.
One-stop shop.
That's the great thing about conferences. You can hit a bunch of things at once. And so if you can get QuickBooks there, it really is convenient for everybody.
It would be, yes. A lot of sense. Now, we still, a third of our training is still on the QuickBooks product. So QuickBooks is there in our breakouts, just not there with any corporate presence.
Got it. Anything else, Blake?
That's it. If you want to get free CPE for listening to the Cloud Accounting Podcast, you can do that on the Earmark app. Search for it on the App Store, on the Google Play Store. This episode will be up there the week after it releases. You can earn free CPE. I'm not kidding. And this is the time of year when everybody needs to get their CPE done. So catch up on your CPE using the Earmark app, listening to Cloud Accounting Podcast episodes and many other accounting and tax podcasts. And then don't let it snowball next year. Use the app every week, get a CPE credit, and you'll see that by November of next year, you've already got all the credits you needed and no more worrying, no more stressing. So hope to see you there.
And you can get a team subscription.
Yeah.
So you can buy it for your team. So Joe, you could buy this for all the members of your community. You could get a discounted subscription to Earmark and gift that to everybody in your community who needs CPE. Or just for your firm. I think you still kind of have a firm, right, Joe? A consulting firm? You're still doing...
I have a consulting firm. I only employ one CPA right now, and that's Heather Satterley.
Okay.
Yeah.
And Joe, thanks for joining us. Really appreciate having you on the show today. Hope to see you again real soon.
Yep. Great to be here as always.
Thanks, Joe. Bye. Time for the classifieds. Are you still paying 1% for ACH to receive money from your customers? With uCollect, you can pay as little as 30 cents per transaction. uCollect has two-way sync to both Xero and QuickBooks Online and gives you the features that the accounting systems lack, like installment plans, secure automatic payment setup invitations, automatic receipts, and allows access to other credit card merchant providers beyond the ones that come with the accounting system, giving you more control over the service fees that you pay. For more information and a 30-day free trial, go to ucollect.biz/CAP. That's ucollect.biz/CAP. Check out Hector Garcia's new app called Right Tool for QuickBooks Online. Instantly increase your productivity with keyboard shortcuts and more. It will save you seconds. The app is free at the moment in public beta. Check them out at righttool.app. That is righttool.app. RIGHTTOOL.app.
I don't care where you live in the United States. If you're a CPA, you have to take ethics continuing education. And I don't care who you are and where you live, you hate taking ethics continuing education. That's why me, Greg Kite, and my buddy, Adam Browd, we created a podcast called Drunk Ethics, where we unfold and expose all of the inner secrets of not just ethics, but how to become more ethical and to promote ethical behavior at your workplace. And we do that while we are getting progressively more shit-faced during the course of each episode. In each episode, we take 7 shots every 7 minutes. And so at the beginning, we are scholarly, and by the end, we are drunk yet still scholarly. If you're interested in this podcast, which I know you are, anyone can listen to the podcast for free. It's out there. You can find it. But if you want CPE credit for it, NASBA certified CPE credit, it is a premium course on Earmark. So if you're already a subscriber to Earmark, it's going to be more than that. But listen, it's worth it because of 2 reasons. First off, you know your company, you know your firm's going to pay for it and not you. And second of all, it's worth it, damn it.
Want to get the word out about your newsletter, webinar, party, Facebook group, podcast, ebook, job posting, or that fancy Excel macro you just created? Why not let the listeners of the Cloud Accounting Podcast know by running a classified ad? Hit the show notes for the link to get more info.